Good day, everybody. My name is Dr. Leon Perlman from Columbia University, Columbia Business School's Digital Financial Services Observatory, a project of the Columbia Institute for Teleinformation. I want to welcome you to the virtual roundtable, Trends in Anti-Money Laundering and Fraud. We have a record crowd of participants. These are obviously extraordinary times, and we hope you are safe, healthy, and they are said practicing social distancing. We've got quite a jam-packed event, and this actually replaces a physical event which we were planning on having at the University of Columbia Business School, but obviously due to coronavirus, we converted this into a virtual roundtable. We're very glad that everybody has joined us. Looking at the participant list, we've got enormous number of countries that have joined us, from anything from Azerbaijan, Australia, Bangladesh, France, Cote d'Ivoire, Germany, Ghana, Tanzania, UAE, US, Mozambique, Qatar, Portugal, Seychelles. So those in the Far East, thank you for staying up late to participate. We really appreciate it. Okay, so if I could just ask you to keep your microphones and video off, please, for the duration. Although we are going to be taking questions, please don't ask questions via audio link at any time. If I could ask you, please send questions to the moderator, host Jason, in the chat box, which you'll see. And also just tell us where you are when you ask the question. Your name will come up. Please tell us where you are. Okay, about me, I'm the founder and head of the DFS Observatory. You can follow me on Twitter, Leon Perlman. I tweet about a lot of the issues that we'll discuss today. The agenda. So session 1 is our first session. We're going to talk about quite a range of issues, from corporate AML policies and procedures, forensic and criminal investigations in session 1 to session 2 on blockchain and distributed ledger technology, cryptocurrencies, and in relation to AML. So we've got an all-star panel today: Nirvana, Patel from Citi, Shawn Polonet from Homeland Security Investigations, and that's going to be moderated by the FSO's own Andrew Araujo. For the session 2, we have Sandra from the Global Blockchain Business Council, Liat Shetret from Elliptic, and that's moderated by yours truly. This is our team at the observatory. There's Professor Elianom, who's joined us. He's the director of CITI. There's me, Michael Weschler, Jason Buckwhite, Keith Bowie, Andrew, and Sam is also remote. We are all remote. It's a lovely picture of New York City, but we obviously not at the campus. We're all working remotely, as probably all of you are today. A bit about the observatory. You can go to our website, and there's a fantastic search facility for a legal database. A bit of our activities: we've got that database, model laws and regulations, do a lot of webinars, roundtables, commentaries, and analysis of new laws and regulations. You can follow our webinars. In fact, there's a fantastic archive where you can view recordings of our webinars going back to 2016, as well as recordings of our summit and other roundtables. You can also download our publications that we've issued in the past 3 years. So this is session 1, the corporate AML law enforcement discussion. Again, Nirvana Patel of Citi, Shawn Polonet, and Homeland Security, and Andrew Araujo. Bit about Andrew. He's just joined us at the FSO. He has extensive experience in AML compliance and risk management roles, both in investment and banking. Strong working knowledge of the U.S. Patriot Act and FinCEN, OFAC, skilled in compliance, and he holds a bachelor's degree in economics from Wake Forest University and graduated cum laude. Nirvana Patel is a senior vice president at Citigroup, focuses on AML compliance and risk management. Experience encompasses AML, fraud, sanctions, anti-bribery, corruption, and the like. Most recently, Nirvana has developed human-in-the-loop models for regulatory requirements, management, consumer behavior monitoring, and geographic risk indicators. And last but not least, Shawn Polonet. He's Assistant Special Agent in charge at Homeland Security Investigations in the Department of Homeland Security here in the U.S. at the New York Field Office. He co-directs the Eldorado Financial Crimes Task Force, which we'll talk to us about. It's the oldest, largest, and most successful financial crime task force in the world. From 2007 to 2015, he supervised HSI's New York Asset Forfeiture Program and began his federal law enforcement career as a special agent with the Treasury Department, U.S. Customs Service in 1998. So over 29 years combined experience, and we're looking forward to hearing from him and sharing his experiences. I now want to hand over to my colleague, Andrew, to take session one forward.
All right. Hi, guys. How are you doing? So we're going to kick it off for session one, corporate AML and forensic law enforcement discussion. So just want to start off. So Nirvana, maybe if you want to chime in on this, in what ways are financial institutions adapting to the changing nature of financial crime?
Thanks, Andrew. First, I have to start off with a disclaimer that any opinion I express today is my own and doesn't represent those of Citi. But starting with the changing nature of financial crime, I think it's good to start with the changing nature of just banking and finance. We've seen an explosion of digital payment methods, customers demanding speed of instant or near instant transactions and convenience, having those go through flawlessly. And really the landscape of parties is expanding too. We have the entrenched players, the interbank networks and switches, but an expanding category of payment gateways and processors, fintechs, wallets, et cetera. So really it's just wanted to set the stage with the changing landscape really of what's happening. Really just to say that we actually don't have to invent a new way of approaching things. We can leverage techniques from the military and law enforcement regarding threat analysis and mainly asymmetric threats, really asking ourselves, how do we combat a threat that we can't see coming? And the whole gist of this is really to prioritize intelligence gathering and dissemination amongst relevant parties. And so having intelligence that gives us a specific advantage in the short operational term, contributes to our strategic planning process, and includes not just one side, but varying viewpoints. And so starting at the beginning, we want to establish a clear mission and vision. Really, what are we trying to accomplish? What are we trying to avoid? It's good to have daily briefing and discussion by analysts, those on the front lines that are looking at this daily, all day. Having a continuous monitoring of news analysis and data feeds and publishing that to relevant parties, strategic planning, scenario planning, and then having regular meetings to discuss the results, any problems that have arisen, and processes. And so how does that work at a bank? Again, we're going to borrow from Homeland Security in this case. At Citi, we have something called fusion centers. I know a number of other financial institutions also have these. And a fusion center really allows us to co-locate relevant parties. So co-locate cybersecurity, fraud, AML sanctions. And what are you fusing? You're fusing people, communications, and data. And that allows us to share data across these different groups, generate greater insights, look at trends that flow across the different silos and impact each operational area. And that really allows us to better understand each threat, and at the end of the day, provide better information to law enforcement.
Okay, thank you for that. Thank you for those insights. And so how do you feel about financial crime compliance programs responding to these recent changes in the economy? Shawn, do you maybe want to add to that? Shawn, are you still with us?
Can you hear me now?
Yep, I can hear
Hello?
you. Yep.
I'm sorry. Actually, can you repeat the question? I'm having a little technical difficulty.
Yeah, no worries. So I was mentioning about how financial crime programs, how they've been responding to the recent and drastic changes to the economy that we've currently experiencing right now.
So, speaking from a law enforcement perspective, which really is sort of my area that I can speak most intelligently about, and I want to also start off with a disclaimer of my own that if you happen to hear any large dogs barking in the background or the doorbell, I apologize in advance. Telework is what it is these days. but so from a law enforcement perspective, the trends we're seeing are basically the rise of cyber crimes are really spiking these days, and the challenge to combating that is law enforcement has to basically follow the patterns, and to address that, we've had to ramp up our cyber crimes investigations. In fact, added a entire division of the Eldorado task force dedicated to cyber financial crimes. We've also historically speaking, we've had a very good relationship with the financial community, and the financial community relationship with law enforcement is really key. We can't do our job without the information that we receive from the banking community. They're sort of the front line of trends and patterns and schemes that we have to respond to. So, we are constantly trying to outreach to partner with the banking sector, and we hold trainings all the time. We're always going out to financial institutions. We're presenting what we see in trends in criminal activity to banks to help better educate them. But at the same time, we need information from them to pick up on new patterns, because that's where we're going to see it first, in the banking institutions, in the street, so to speak. So
that makes sense.
Collaboration.
That makes sense.
Yeah, the collaboration is really key, and that hasn't changed. But in fact, we are trying to ramp that up even further, because with the proliferation of cyber crimes, things are happening so quickly. We need that constant communication, and really, that's if I want to call it a trend. We're seeing that the cyber crimes and the speed in which these things are happening are really increasing.
So just to piggyback on that theme, out to the panel, how can banks and government better collaborate on these investigations together? Is it through, more training, through better information sharing processes? What types of actions or behaviors do you think need to take place for better collaboration?
Well, if you don't mind, I'll sort of follow up on that. Just from a law enforcement perspective, sorry to interrupt, but so this is something that I've seen over the course of many years. It's while we do have a great relationship with many banks, and the sharing of information is really great. I'll say on a large, 10,000-foot level, we hold trainings, we host events such as this, but it really has to start at the, I'll call it the teller level. The bank picking up a phone and calling somebody in law enforcement to say, hey, we have a problem here. We're seeing this activity. We're about to file a SAR. Now, banks, as most people understand, file suspicious activity reports all the time. They're required to by law. But what they don't have to do, or not required by law to do, is also pick up the phone and reach out to law enforcement directly. I know banks have concerns about that on some levels, about privacy issues and other regulatory concerns about calling law enforcement on a particular client. But I would argue that the fact that they're going to file a SAR anyway, which is read and reviewed by law enforcement, or has the potential to be, they're already, they've already, it's part of the same process. So anyway, just to kind of cut it off, being able to pick up the phone and reach out to a law enforcement contact when they're seeing something in an almost real-time basis, I think is the best way forward. And I think really is where I want to focus, efforts on collaboration in the future.
And I'll definitely underscore that. For banks, if you don't have a line to law enforcement, always have one. Reach out to the local FBI office, find someone. It may take a few calls, but the result is more than worth the time. And then the only thing I'll just add to that is continued or expanded participation in the public-private groups. So in the U.S., we have the National Cyber Forensics and Training Alliance, the NCFTA. That is an excellent source for banks to kind of come together, pool intelligence in terms of cybersecurity, and work directly with the FBI. On the AML side, there is the Bank Secrecy Act Advisory Group, BSAG. Again, that is financial institutions working directly with law enforcement and regulators on implementation and trends in Bank Secrecy Act compliance.
All right, thank you, Nirvana. So, Shawn, I wanted to ask you, could you talk a little bit about the Eldorado Task Force, specifically like what it is and what does it do?
I'd be happy to. So the Eldorado Task Force is, as was indicated earlier by Dr. Perlman, the oldest, largest, most successful financial crimes task force in the world. I don't say that lightly. It was begun in 1992 with a mandate from the White House to combat narco money laundering, which was basically in the 1980s, late 70s, was really rampant, and there were very few controls on banks to prevent it. If I like to throw out this analogy, if everyone can remember the movie Scarface, where at one point in the movie you have the bad guys bringing duffel bags of money right through the front door of a bank and then being counted in the back room. That kind of activity was happening. And to combat that, the Office of National Drug Control Policy, which is a division of the White House, and the U.S. Customs Service at the time, created the Eldorado Task Force. It started with a handful of partner agencies, about 5 of them. And then, again, its focus was combating narco money laundering in the New York metropolitan area. Over the years, about 28 years later, it's grown now to basically over 200 members from over 30 different law enforcement agencies at the local, state, and federal, and now international level. We just brought on the City of London Police into the task force. So the focus has also expanded. We still investigate as our core mission narco money laundering, but it's expanded to over 11 different unique teams that focus on different aspects of financial crimes. We have the trade-based money laundering, team, which is also known as a Black Market Peso Exchange, which is a narco money laundering system. But we also have foreign public corruption units. We have asset forfeiture units. We have a financial intelligence branch associated with the task force known as the HIFCA, which is an acronym for High Intensity Financial Crimes Area. So they're co-located with us, and they're basically our FIU for the task force. We have undercover operations and so on. So it's a very robust, very well-funded, very well represented task force. And through the shared expertise, the shared knowledge base, the shared access to information, we've been very successful in combating money laundering. In fact, as I said, we also added the cyber crimes division to it in the last 2 or 3 years. So we're trying to always evolve to kind of keep up with the times. And it's a challenge, but basically we've done pretty well. Over, I think, 3,000 arrests since the inception of the task force, over $2 billion of criminal proceeds seized and forfeited. So that's the task force. It's housed in New York City by HSI, and even today we're still out making arrests and seizing proceeds even during these challenging times. So that's the Eldorado task force in a nutshell.
All right, thanks, Shawn. And I just want to remind participants, you can ask questions via the chat box. Just send them to Jason, the host, and just indicate which country you're from. Don't be bashful. Any questions are good questions. And so, kind of just to piggyback off of what Shawn was saying again, are you seeing like the reemergence of any criminal financial schemes and trends? I would imagine the pickup in cybersecurity is also related to everybody working from home as well. But I'm just wondering if we're seeing any reemergence of any schemes in recent times.
Well, from a law enforcement perspective, we are seeing things in terms of trends and patterns. We are in fact seeing a resurgence in traditional narco money laundering. The Black Market Peso Exchange, as I mentioned before, which is a complex scheme to get U.S. dollars that were proceeds of drug sales back to their countries of origin, in most cases like Colombia. So the system was derived a number of years ago, many years ago. But it's continued unabated, basically. It's the exchange of it. It's complicated, so I'll try to put it in simple terms. It's the use of traditional legitimate commerce to launder drug proceeds. So basically, if someone needs to get their money back to Colombia from the U.S., they may buy assets. They may buy equipment, large things like tractors. They'll use it to buy that equipment and then have the equipment shipped down to Colombia or whatever country it's going to, and then resold in their home country. That's one way to basically launder drug proceeds. We're seeing that a lot. We're seeing now these online scams. It used to be telemarketing. The Nigerian frauds, as they were commonly called. People used to call up and say, you've won the Irish lottery, or what have you. Those scams that used to be telemarketing frauds have moved online. So it's sort of a continuation, but in a more modern fashion. And especially the elder abuse frauds have really spiked in the last couple of years. So we're seeing, a substantial uptick in those frauds as well, as I'm sure everybody has sort of gotten those type of emails or type of online scams. So those are the kind of trends that we're seeing a reemergence of, in addition, of course, to all the other traditional frauds that are taking place all day long.
And if I can just piggyback on that, some other things I will say are increased social engineering. So using Instagram or Facebook or something like that to recruit either co-conspirators and mules. And then while not necessarily emerging, I will say that business email compromise continues to be an issue, especially because the dollar values associated with business email compromise schemes, they tend to be larger than other fraud schemes. And depending on the line of business, there may be other parties involved in any sort of transaction, which, as a financial institution, you're kind of forced to rely on their controls. An example would be if you're in the asset management business, you may have to rely on the controls of your transfer agent and, do they have the appropriate controls in place? Are they referring suspicious activity to you to not process? Are they actually denying those transactions, or are they just pushing them through? It's business email compromise. It's something that we continue to see.
All right, thanks, Nirvana, for adding that insight. So what are some of the biggest challenges you think that your organizations are currently facing right now from an AML perspective?
Sure, I can take that. One is adjusting to changes in requirements, whether that's AML requirements, data privacy, sanctions. It's the kind of typical change management challenge, which is how do we maximize the time between first learning of the change and actually completing the implementation. We want to make sure that that runway is as long as possible so we can not only implement, but test and validate. Another is scaling new technologies. You always want to make sure that you have high confidence in the data that is used. You want to be able to adjust models with real-time data. And that always becomes an issue when you're trying to actually implement that in production. And so it's good for exploratory data analysis, but actually implementing that in production creates its own challenges. I will say that thankfully, the large tech companies, they tend to open source their frameworks. And so financial institutions can leverage those rather than inventing something from scratch. Two other challenges. One would be breaking down information barriers and centralizing critical intelligence. Fusion centers, as I mentioned earlier, that's really just the first step. Those are always being changed and trying to adapt to new intelligence, new data streams, and really picking out the signal from the noise and all of that. And the last one would be just limitations in information sharing across various financial system participants. Firms a lot of times tend to focus on protecting intellectual property rather than seeing financial crime as a systemic issue that requires collaboration from all participants. And also, of course, reaching out to our law enforcement partners and getting them valuable intelligence.
Thanks, Nirvana. I wanted to, since you mentioned some of the new rules, I wanted to just get a point in on how has the new CDD/beneficial ownership rule impacted your organization and your clients?
Sure. So I know we're talking about the FinCEN rule, but I will say that collecting beneficial ownership information isn't necessarily new, especially if you're a global financial institution. You have to comply with the laws and regs of each jurisdiction. And so non-U.S. jurisdictions, they've had beneficial ownership rules in place for longer than the U.S. And, that's definitely helped with implementation of FinCEN's beneficial ownership rule, but that actually comes with its own nuance, which is, the FinCEN beneficial ownership rule, and, of course, it has a customer focus, but the actual practical application requires refreshing beneficial ownership information every time an account is opened. So especially if you're a large multinational corporation client who often will establish multiple new accounts each day, that creates an operational burden for financial institutions. So, there was an expectation from FinCEN likely that this took not a lot of time, maybe 30 minutes to actually refresh this information, while for most clients, realistically, we're saying it can take hours, and for large, complex clients, it can even take days. And so banks are spending millions of dollars in compliance just for the FinCEN piece of it alone, and are trying to work with FinCEN to shift to the more customer-focused application rather than the current account focus. For our clients, the goal is really to make the collection of this as painless as possible. Not everything has to be built in-house. There are a handful of very good banking software providers that have excellent customer onboarding workflow to assist both the frontline and back office employees. I'll just kind of piggyback on some of the changes, though, that we are seeing with it. Ken Blanco, speaking on behalf of FinCEN, he's been pretty open about the need to go further than the current rule. And so he wants to close what he sees as a national security gap by collecting the beneficial ownership information upfront at the corporate formation stage. So because we love our acronyms, I'll read this entire thing first. It's the Improving Laundering Laws and Increasing Comprehensive Information Tracking of Criminal Activity in Shell Holdings. We'll shorten it to the Illicit Cash Act. That's currently draft legislation in the Senate, and that will basically create a centralized repository for beneficial ownership information to be maintained by the federal government. There are still some outstanding discussions and questions about that. Is FinCEN fully resourced to actually be handled the creation and maintenance of the database? Can financial institutions rely on the database rather than their existing beneficial ownership collection processes? Realistically, how much responsibility can banks actually offload to FinCEN with the maintenance and creation of this database rather than their own processes? Looking to AMLD5 in Europe, we actually get a sneak preview of what that could look like, and hopefully a different implementation in the United States, which is financial institutions, they, have to consult the beneficial ownership registries in each country, but they can't necessarily rely on them. And then if they identify any discrepancies between the information they collect internally and that contained in the central registry of a country, they actually have to inform the authorities as well. So it's a whole nother step in the process that goes along with the beneficial ownership. So it's definitely dynamic. It's changing. It will change in the United States. But again, we hope that changes to be the customer focus, as well as having some good conversation with FinCEN about the reliability of the database itself.
All right,
and if I may piggyback onto just for a moment
please.
what Nirvana was saying. I mean, from a law enforcement perspective, the challenge of beneficial ownership has been just forever one of the biggest issues that we face, because in the financial criminal investigations world, it's all about following the money. You have to trace the movement of money. Basically, just to back up a second, most crimes committed have a financial motivation. There are a relatively small number of crimes out there. Basically, I call them crimes of passion that are not financially motivated. So when we're looking from a financial criminal investigator perspective, we're trying to follow the money. The money is going to lead us to the principles of a criminal organization. It's going to show us the network of the criminal organization. And when we run into situations where we have corporate names, accounts held by corporations, that the beneficial ownership is unclear or misleading or incomplete, we run into basically brick walls. It becomes nearly impossible to overcome those barriers that you would think law enforcement might have special tools up its sleeve or access to information. We really don't. I'm beyond, of course, what is available either to banks or to governments. When corporations register, they have to file information, but if it's incomplete from the outset, that becomes a challenge to us, and it makes our life much more difficult. There are ways we can try to overcome that, but it becomes very challenging. So to tighten up on the beneficial ownership laws, again, Nirvana has been saying, it's FinCEN-driven. FinCEN is the Financial Crimes Enforcement Network. They are basically working towards making the law enforcement playing field a little more level with the right for privacy. There is a balance, but we saw when I was an investigator in my headquarters in Washington right after 9/11. I was part of a task force called Operation Green Quest. It was a terrorism financing task force, and one of the challenges we were seeing then was that a lot of terrorism financing was being conducted through the movement of money through hawalas. And there is very little regulation, I would say no regulation basically, at the time over the movement of money through these basically mom and pop money remitters. No oversight by any financial regulation body. So that also became a challenge. And I think through those lessons learned, this is where we are today, trying to update some of those beneficial ownership laws.
All right. Thanks, Shawn. I appreciate that. And so we have a question in from Paul Merriman in Ireland, and I just wanted to try to segue into some questions from participants. So I'm not sure about this, but Shawn, has your team looked at cryptocurrency trading as a form of trade-based money laundering or white-collar crime?
So the short answer is yes. We, as I mentioned earlier, have a cyber unit dedicated to looking at cryptocurrency on every level, both as a means for trade-based money laundering, also to anonymously move money for criminal purposes and legitimate purposes too. To be clear, obviously, cryptocurrency is not all about illegal activity, but right. Because of the relative anonymity of it, and to be clear, it is not completely anonymized. But many people think it is, or makes it more difficult for law enforcement. We're seeing an uptick in cryptocurrency use at every level, as well as trade-based money laundering and traditional money laundering. Yes.
And Nirvana, in your experience, maybe not at Citi, but elsewhere, have you seen cryptocurrency being used to facilitate, some sorts of financial crimes?
I'll say absolutely. Criminals are opportunists, and so cryptocurrency is just another means of moving and storing funds, and it has its own nuances. But anything that can be used to move and store funds, the criminals will use, and anonymity is the criminal's best friend. So anything that allows the criminal to distance themselves from the crime and the proceeds of the crime, I think that's going to be a go-to. And like Shawn mentioned, not all cryptocurrency is anonymous. There is, pseudonymous. And so, they may think that they can rely on that, but, we have tools nowadays that can actually track funds through the blockchain, which is advantageous for law enforcement and for other people trying to fight financial crime.
All right. Thank you. So I just wanted to mention, too, that this session is going to be followed by Crypto Session 2 in just a couple of minutes. So we have a question from Joelle in New Jersey asking, what percentage of illegal actors have false IDs that would interfere with the beneficial ownership rule? Can one of you, Shawn or Nirvana, do you want to take that?
Yeah, I'm not sure if I can actually give like a
Yeah, I'm not
percentage,
sure
but,
either on that.
The sophistication of each criminal is, I should say, the sophistication is going to differ from criminal to criminal. And so, hopefully we are able to, I hate to call them stupid, but catch the dumb ones that are more likely to slip up and aren't as sophisticated in their techniques. But, as I'll say, in terms of identity verification, there are new ways of going and doing that through biometrics for actual individuals, and that is always going to be a nice way of having more confidence in the verification of that identity. A lot of fintechs are using technology such as that, facial recognition, and other biometrics. And so I think as we continue to move towards newer and more advanced ways of verifying individuals' identities, hopefully the percentage of false identifications, we can start to kind of squeeze that number.
All right, thanks, Nirvana. We have a question from Francisco in Italy. It says, if you could pick 2 magic tools that would improve your professional life and make investigations easier, what would you choose? He gives examples of like international cooperation, joint investigations. What magic tools do you think would be able to help you perform your job?
I guess I will take that one from a law enforcement perspective. Not to sort of beat a dead horse, but the issue of beneficial ownerships is really something that we've had a great deal of difficulty working through. I think if we could sort of had a magic tool to see basically every beneficial owner in every financial account or business, that would make my life, our life as investigators, substantially better. In terms of international cooperation, because that was mentioned, we do have very good international cooperation with many countries, as you can imagine, some better than others. We had an investigation a couple of years ago involving a substantial and notorious Russian tax fraud, where we looked to the Russian government for assistance in investigating that fraud. Not only did we not get the assistance we had hoped for, we got misinformation from the Russian government. So in a perfect world, we would get all the answers that we asked for from our law enforcement partners around the world. And in many cases we do, but again, you have to consider who you're working with. I know I didn't quite give you 2 full answers, but I think that sort of is to make our life easier is to be able to follow the money easier is the bottom line. And one way to do that is to cut through anonymity. And however we can do that on whatever level, whether it's the cryptocurrency level, whether it's the beneficial ownership level, that would make our life substantially easier.
Thanks, Shawn. That makes sense. We have another question from Hal Fan in Kenya. So, when they take into consideration the beneficial ownership laws, is there a consideration of GDPR, given that many U.S. companies also have EU customers as well?
Yeah, I will say that data privacy is always it's always a consideration for anything within beneficial ownership, though GDPR and other data privacy laws, they actually have kind of a specific carve out for compliance, especially like financial crime compliance. So of course we want to combat financial crime. We want to provide useful information to our law enforcement partners. And the only way we can do that is to actually have access to PII and be able to kind of connect the dots. There are some restrictions about sharing that information across borders, but I know that especially like within the United States, there are conversations about being able to share some of this information with other jurisdictions. I will just say the ability to do so differs jurisdiction to jurisdiction. There certainly isn't any global consensus on sharing information related to financial crimes. I think Shawn from the law enforcement probably has, I would hope, maybe less red tape than we do as financial institutions. But we do have the ability to use the information to fight financial crime. So hopefully the beneficial ownership laws, as they continue to expand and be refined, they'll take that into consideration.
All right, thanks, Nirvana. And so I think we can now switch over to the second session regarding cryptocurrency. And so I'm going to hand it off to my colleague, Dr. Perlman.
Thank you so much, Andrew, Nirvana, and Shawn. I actually learned quite a bit from the discussion. But we're going to segue now into a topic that's super interesting to me and I think also to a lot of people, use of blockchain and distributed ledger technologies and cryptocurrencies and the ML implications and use cases. And online to participate is Sandra Rowe of the Global Blockchain Business Council, Liat Shetret of Elliptic. And again, if you are going to send questions, do so via the WebEx chat box, only to the host, Jason. No voice questions, please. And if you could, just tell us where you're from. So the blockchain and cryptocurrencies is a relatively new ecosystem, not so new anymore, but relatively new. And because of that, I just wanted to give you a quick primer, simply because it creates a whole crypto economy and decentralized financial ecosystem using tokens, cryptocurrencies, and tech like blockchain, which in of itself creates a whole lot of anti-money laundering issues and use cases to detect and fix money laundering. But all this came around, and again, this is a very quick primer just to give context to our discussion. It derives from a paper in 2008 where the terms blocks and chains, not actually blockchain, was introduced by one Satoshi Nakamoto, whoever that is, and where he or she discussed something called Bitcoin, a peer-to-peer electronic cash system. So blocks and chains were mentioned there very briefly in 101 terms. These are blocks in a blockchain. Transactional info is stored on blocks, cryptographically secured blocks. And you get new data inputs from participants, also called nodes, usually the result of mining, which is a system that is rewarded through payment to these miners. As more data in the blocks is added, the chain grows. And what's interesting about this is that it's tamper evident. So tampering with the data is evident to anybody. It's not immutable, as was believed right at the beginning, which mutable means it cannot be reversed. It can be reversed, but that reversal, if somebody did do that, which might be a fork in blockchain terms, will be evident to everybody. So everybody can see that somebody is trying to tamper with the data form stored on the blockchain. And to give context again, this looks like a difficult to understand slide, but these, if you look at the left, the Russian doll type concentric circles, these are the DLT-based hierarchies, distributed ledger-based hierarchies. So the family is distributed ledger technology, and under there you get shared ledger technologies, and the technologies themselves, the protocols like Ripple, blockchain, and Adera hashgraph, and then you get the applications that use these technologies like Bitcoin, and what we're going to discuss as well is RegTech, tokens, and the like, and then crypto assets under that, cryptocurrencies, utility tokens, security token offering, initial coin offering. So besides the crypto and the digital asset components of distributed ledger technology and blockchain, there are lots and lots and lots of applications, and I won't go through all of them, but something like proof of ownership, electronic ID, prediction platforms, points-based value transfers, tons of them. And our next speaker is very well positioned to explain all that because Sandra Rowe, a good friend of the DFSO, is a CEO of the Global Blockchain Business Council, and Sandra is very, very well known. In fact, she's a fixture of the blockchain world, speaks at many events and now online events, board member, advisor, and co-founder of several startups. She was at the CME Group, where she led digitization, and the CME CF Bitcoin pricing indices and CME Bitcoin futures. She holds an MBA from the London Business School, studied computer science at Columbia University School of Continuing Studies, and earned a double degree from Yale. So I'm going to hand over now to Sandra to tell us about the Blockchain Business Council and blockchain.
This is Sandra Rowe here. I am sitting in New York in my apartment, like many people might be in their homes. I wanted to just give you, first of all, thank you to Dr. Perlman and the entire team at Columbia for the opportunity. I think we're going to have a pretty riveting 45 minutes to come. I want to start off by just explaining for those who are not familiar with GBBC. I went from having a background in banking and trading to going into a nonprofit where I focus on education, because one thing that we realized as blockchain and cryptocurrencies were taking hold, the amount of hype, the amount of noise, the number of applications or use cases proliferating, it's very confusing for people who are not doing this day to day. And frankly, the messaging from a public PR standpoint probably wasn't that great. And now the industry is maturing, and there are a number of different things that are going on that will actually be ubiquitous. So let me talk about GBC first of all. It started in 2017, launched at Davos by a group of entrepreneurs. It is a Swiss-based nonprofit focusing on education, advocacy, and partnership. It's all about collaboration. And we work with some of the largest corporates in the world, as well as with governments, regulators, and central banks, the decision makers who move the dial in being able to change either policy and or the way we are regulated. We look across multiple industry sectors. We do spend a lot of time on fintech and financial services, but we also look at energy, supply chains, healthcare, you name it. Blockchain is pretty much flowing into many different industries in different ways. So when I take a look at the AML landscape, I'm just going to take a few minutes here to talk about how I see things from a macro level. It's really interesting to see that actually the banking sector has obviously had to adapt and grow. And we just heard about that in terms of how they deal with KYC AML. And that's pretty much been ongoing since, regulations have come in. However, the nature of what's different now, I think, is this is all about data. So what do I mean by that? Well, the number of transactions have increased multiple fold. And as cryptocurrencies and different types of digital assets come in and different technologies come in on facilitating payments, that will particularly be a challenge because technology always leads, and let's face it, it's always very difficult when you have legacy systems and rules to follow and make sure that you stay up with that. So how can blockchain technology itself possibly be a friend and a risk mitigation tool? There's actually a number of use cases, which we can go into a bit later, that actually make blockchain technology itself pretty attractive from a regulator standpoint. And when I say that, I'm really talking about identity management and controls. I'm talking about digitizing workflows, but in a way that allows for the verification and the determination of what specifically has been codified as data. It does not, let me be clear here, it does not mean that the data is good just because you put it on a blockchain. You have to verify the fact the data is actually good separately. But you can actually make sure that nobody can mess with the data after it's been secured. And then the data sharing piece, I think we've talked about that earlier, that was mentioned. As borders become more porous and technology becomes facilitates the ability of movement of value across different mediums. It's very difficult just to do things across sovereign lines. And the data sharing then becomes important for international bodies and then sovereign bodies to actually share information responsibly and keep that communication flow going. And then beyond that, it's a risk mitigation tool because you can do things in real time. There are still regulatory and supervisory organizations that take an awesome amount of time to just get data in, process it, and then run the analytics. And then before they know it, it's already weeks in. And therefore, it's not real-time risk management. And that we can improve. So there's a few examples there. And I'll stop with that and hand it over to the next speaker.
Right. Thank you, Sandra. I know the questions coming in for you already. Again, if you are going to ask questions, we'll take Q&A after the next presentation. If you're going to ask questions, do so via the chat box to Jason, the host, and please say which country you're from. So with that, I want to introduce another good friend of the FSO, Liat Shetret, Senior Advisor, Crypto Policy and Regulation at Elliptic. Very well known in AML circles, 15 years designing and implementing global AML capacity building programs in the Horn of Africa and Middle East. She's a researcher, writer, and program manager on issues of financial inclusion. She has a MIM International Security Policy from CEPA at Columbia University and a BA in Psychology at Political Science, University of Illinois. So Liat is going to give us a presentation on what she does and what a company does on an AML perspective, and I want to hand over to you now, Liat.
Thanks, Leon, and good morning, good afternoon, good evening, everyone. Thank you so much to Dr. Perlman, Michael, Jason, and everyone else at the DFSO for having me today and inviting Elliptic to the conversation. I'm really pleased to be here and really look forward to continuing the good discussion that's been started up by Andrew, Nirvana, Shawn, and Sandra, so thanks so much. I really appreciate the colleagues dialing in from, down the street here in New Jersey, which is where I am at the moment, and then across the country as well as around the globe from east to west. And, we recognize that these are really unprecedented and challenging times. Our attention is surely split. So I'm grateful that you're opting to spend your time with us here today, and I'm hoping to make it valuable for you. I do hope that your family is all safe and healthy. So I thought I would start out just with a little bit of context. Many of you may be familiar with this mammal. This is a pangolin. Others might think of it as Sonic the Hedgehog if you ever used to play Sega video games or games generally. So that's a little guy that kind of rolls around in a ball and then travels by ball. So the reason I'm starting out with the pangolin at the moment is because I just want to give a tiny anecdote from previous work that I've done across the Horn of Africa and looking at kind of the wildlife crime chain from sort of source countries to transit countries and then destinations. And given the current context, this is particularly important because there's a lot of conversation spiking around wildlife crime, and this is a relevant topic, particularly with the pangolin, because we have been reading in the news that, perhaps the COVID-19 has started up in bats and pangolins, and the discussion there is really that both animals and some form of it are able to be source animals for COVID-19. And so I thought it was important to maybe have a quick chat about this one. In fact, anybody who's heard me speak before knows that I find every single opportunity I possibly can to shove in points about wildlife crime, and pangolins specifically. They're an adorable little creature and are terribly trafficked and utilized for money laundering crimes. So just as a drop set, or as a setting the scene, I would say that wildlife crime is particularly complex. There's over about 7,000 species that are trafficked globally. The pangolin is one of them. And what's particularly challenging about this is that each animal in itself can be processed into many different products for different kinds of consumers and markets, which has created just numerous supply chains around the globe. So it's not just the single animal traffic, it's the different parts, the scales, the meats, the different claws, the ivory, the different kinds of elements that you can break down an animal or a species to. So coming back to pangolins, they can be trafficked and sold both whole, whether it's live or dead. We've seen instances in which the scales are blended down or sort of granulated down and served, medicinal purposes. Their scales are sometimes used as jewelry ornaments or have previously been used in couture markets. There's a quite huge belief that the pangolin scales, once ground down, are effective in helping male performance, and then the meats are considered to be quite a delicacy. So these are really sought after animals, and one of the biggest containers that was intercepted, it was a maritime container headed from Africa to China. It was registered in the maritime registrar as being actual timber, as well as sliced and recycled plastics, and inside was 7 tons worth of pangolin materials, 14,000 pangolins to be exact, and that was worth more than $4 million. 712 kilograms of pangolin scales worth $2 million, and these were seized on an Emirates flight via Dubai and Kuala Lumpur as part of the 2 shipments that had originated in Congo and Ghana. So they were all registered under a fake company address, also labeled along the way as dry herbs or general products. And just to make the crypto connection and to contextualize this, while we are seeing pangolins sourced on dark markets, the crypto purchase connection is not quite there at the moment, probably because the black market for poached animal products still relies on kind of the dollar and other fiat currencies. And this could change in the future, but that's where it stands today. And there's actually a great report out from 2018 by the Global Initiative Against Transnational Organized Crime that talks about this nexus between illicit wildlife and the dark market report. So I'll leave it there. I'll leave you with the pangolin, only because you may have seen it in the news. I, again, don't miss an opportunity to talk about the pangolin. And now I'll just quickly backtrack on bringing us back to the topic of the day and crypto and anti-money laundering, and a brief introduction to Elliptic. Elliptic is a tech company founded in 2013 and is really underpinned by a firm belief in the power of an open financial system that's built on crypto assets. So we pride ourselves on superior data sets and data integrity, and in essence, are working to make crypto safer. In my mind, I often think of Elliptic as data wizards. When I see some of the team's work coming out and the magic that they do, it's pretty compelling and fascinating and very, very informative, obviously. So our aim is to see adoption occur at scale of crypto. We do this by providing software and services that enables banks, financial institutions, and crypto exchanges to assess the risks that are posed to them by crypto asset transactions. So, for example, identify transactions that are linked to money laundering, cybercrime, or sanctions evasion, and really confidently meet AML, CFT, and sanctions regulatory obligations. We had a bit of discussion about, our crypto transactions anonymous. What does that look like? And I think I would confidently say that with the right tools and with the right lens on, you can certainly have that super X-ray vision that allows you to see very clearly on the blockchain what's happening in terms of end-to-end financial funds. So I see Elliptic as kind of a connector between the traditional financial sector and the crypto industries. We have over 100 customers in 30 plus countries, many of which are dialed here today, and 4 office locations: London, New York, Singapore, and Tokyo, and over 150 million addresses that are associated with digital entities identified in our tools. So I want to touch on 3 issues today. Kind of the first one, we still hear a lot about, well, crypto, it's here, it's gone, it's crashed, it's going away. I just want to mention kind of the data around, why is crypto here to stay and what that means for anti-money laundering. I'll briefly touch on, what are regulators saying that we should be doing now that crypto is here, because they are saying, and they're saying a lot. And the third topic is, what are some of the issues in the crypto banking nexus? And given that we have a wide interdisciplinary kind of group on the call, I just am kind of putting out a few key messages that might apply, whether you're in academia, regulation, law enforcement, a tech company, or so on. So that's kind of roughly what I'll be talking about. So in terms of just, the growth and adoption of crypto, it's been a journey, as you know. It's been kind of a growing, maturing ecosystem. And if you compare kind of Bitcoin's market capitalization with the value of traditional financial currencies, you'll find that Bitcoin is slotted in the top 10. And that's a really interesting point. So for example, there's more Bitcoin than Korean won in circulation at the moment. There's more Ether than South African rands. And that's a shout out to Leon from South Africa. And then what we're seeing is that crypto is becoming more widely accepted and adopted. So 36 million Americans own crypto. And we're also seeing increasingly what we've kind of been thinking about conceptually as a banking crypto nexus, this idea that more traditional services are being available with crypto. So for example, collaborations and partnerships between exchanges and financial services that are offered, partnerships between big companies that are may have started in crypto but are now kind of smoothly moving between and within the industry. And then we also have 56% of millennials who either own or plan to own crypto, and then institutional investors who are looking at crypto assets. So crypto, I guess I would just conclude broadly, is somewhat inevitable. And that would be kind of a main premise and assumption that I would leave on the table here. And with that kind of uptick and upscaling and maturing ecosystem, we're faced with new risks, right? So the financial sector as a whole is seeing new risks that are coming up. A lot of conversation around digital money and value movements. Just a few days ago, even yesterday, there's this discussion around digital dollar references that were initially in the stimulus package that had originated here in the Senate, but was then stripped out and still undergoing kind of discussion. Crypto is enabling an open kind of global connected financial system, but there's a lot of work that still needs to be done about different definitions, risk mitigation. The bottom line kind of tends to be that, what the internet did for information, crypto will do for value. And we really see risks coming out with innovation. And at Elliptic, we're looking at developing the antidotes, right? So, for example, there's 120 million global numbers of active users of digital asset exchanges, and we see over $500 billion dollars flowing between the traditional banking system and crypto each year. And that's a lot. That's a lot of money, with 2 billion of it more or less being a trading volume between exchanges and illicit sources each year. And I think what's really unique about blockchains, and Leon's given us that great primer at the very beginning, is that you do have visibility into the fund flows. You can follow the money and assess where did it come from, what percentage of this came from a dark market, and you can act accordingly and apply a risk-based approach within your institution. So in kind of just shifting on to the second point here with regards to what are we doing about it, what are regulators saying. So the Financial Action Task Force presidency was with the US in 2018. And in October 2018, there was a call for action for virtual assets, and it was really put on the table as an urgent need for all countries to take coordinated action to prevent the use of virtual assets for crime and terrorism. There was urgency in this because the last time that the guidance was revisited for virtual assets was in 2015. So the FATF said we must address it, and indeed that's what was done. And in June of 2019, the FATF issued a very comprehensive document guidance titled Virtual Assets and Virtual Asset Service Providers. And what it did is really issued kind of a comprehensive guidance that was also developed in consultation with industry, which was really, really good. It set out a clear implementation target for all countries to be June 2020, so that's upcoming. And it really provided more insights into how it is that countries can be assessed for effectiveness as part of kind of the usual Financial Action Task Force mutual evaluation process. And so essentially, there's finally a broader international framework, and though various jurisdictions, for example, the US, Japan, Singapore, and others, the UK, have already been setting up as national agencies and national regulatories their own specific country regimes, it's been particularly critical to get other countries on board and to get other countries looking at their virtual space as a border, as a frontier, to think about what it is that we need to be doing to protect that virtual space as well from money laundering and terrorism financing, so that we don't end up with this unlevel playing field where you've got particular specific countries scrutinized and following very strict measures, while others are you know, sort of on the prairies, and there's no real emphasis on compliance and regulation in those countries. So the June 2019 guidance essentially broadened the scope. It expanded the range of service providers that should be covered by regulations. So, for example, in the past, it had focused only on services that really cover that nexus between fiat and crypto. So those places where there's that link between, you know, the euro, the US dollar, and so on, and crypto. And what this guidance did is said, you know what, we're not going to focus only on that on-ramp point. It needs to be much broader. We need to be addressing all kinds of services. And so the guidance addresses crypto-to-crypto swapping, wallets that control customer funds, token issuers, any payment processes involving crypto, as well as Bitcoin ATMs. The second very important piece is that they slapped on a definition onto virtual asset service providers and virtual assets generally, which gives a common language for countries to speak about this. And it's a really important point because, you know, thinking of a world where, you know, digital money, you know, I know we have some colleagues from Kenya here, and M-Pesa had an explosion in Kenya. So how do you draw a line between virtual assets and other types of digital funds and so on? So it's a really important conversation, and a line has been drawn in the sand with this guidance. So there are these three kind of boxed gray areas here, the decentralized exchanges, PTPs, and dApps that are pointed out. These are kind of, this is a space where there may not be a central issuer running the platform, but the regulation in this case may or may not apply to them. And this is based on the kind of activities. So just labeling yourself as decentralized does not excuse you from regulation, but there's going to be a very specific kind of look at what are the actual activities that are done on these platforms, and simply kind of noting yourself as being decentralized does not exclude from regulation. Many of you might be familiar with this, you know, governance, risk assessment, know your customer, customer due diligence, transaction monitoring, audit and assurance. This is really the bread and butter of banks and financial institutions generally, and money service businesses. This point is basically to say all of that same infrastructure and regime now clearly applies to virtual asset service providers and virtual assets. So this is a really critical point, because when we look at trust building between industries, it is really important that banks understand that crypto exchanges that they might be offering banking services to are also regulated, and they're also following kind of a similar governance structure that they might have in their own financial institutions around AML, CFT. And that opens up opportunities for conversation. It opens up opportunities for business partnerships, and it certainly helps and mitigate risks. And I often think about it like a correspondent banking relationship, where a bank is getting to know a new potential correspondent bank, then this is that opportunity to really get to know crypto exchanges and reach out on a mutual common language. What does your compliance program look at? Let's have that conversation and really help to maybe demystify a lot of the myths around how our crypto exchanges and crypto businesses really regulated. Another piece here, and I might just start speeding through because I am very enthusiastic about this topic and can talk about them forever, but I want to have a chat with some of the questions as well. But another quick piece here is around transactional transparency. You know, the guidance that was set out is very clear, noting that there must be transactional transparency, and that has kind of two pillars. One of them is transaction monitoring, the same transaction monitoring, the same raising of suspicious activity reporting that needs to be had, of course, adjusted to whatever elements and pieces of information are needed for crypto businesses, and then the travel rule, which is essentially the same rule that applies to kind of as in a traditional wire, where the sending and receiving information of customers needs to travel between institutions. That particular piece has had a lot of industry consultation and continues to be an ongoing issue that folks are discussing across the board. So I might just skip this one and maybe welcome another opportunity to discuss it. I do want to touch briefly on banks and crypto de-risking. So we've seen a lot of the conversations around bank de-risking or debanking. Essentially, when banks deem that a particular business is perceived or is in fact too high risk for their business and doesn't meet their risk appetite or threshold, then they choose to close or exit that relationship. And this is where, it's a bit of a deja vu for me and anyone who's been working in the hawala or money service business space, because that conversation is now being reenacted as it was formerly with the money service businesses and now in the crypto space, where, crypto businesses are really struggling given the label and perception of them being so high risk, unmonitorable, very difficult for them to open and maintain bank accounts. And this is where, the FATF has stepped in and says that they absolutely do not support the wholesale termination or restriction of business relationships with a particular sector. And they very much specifically point out virtual asset service providers, and that it's really important to manage risks in line with FATF's risk-based approach rather than de-risking. And so these are just a few headlines on the screen here, right? So Bloomberg, crypto companies still run into trouble opening bank accounts, major US banks hostile toward Bitcoin's accounts at risk of closure, and then, cryptocurrency companies forced to bank outside the UK. The era has changed. This industry is now increasingly regulated, and the tools and softwares and technologies are available for safe crypto banking. So I really just encourage, more education, more awareness raising. What does a compliance program look like to just kind of get over this and this hurdle and not really rehash the same conversation that we've had with the money service businesses and hawalas previously, so that we learn from our mistakes in the past, or that we just adopt learnings. And when it comes to kind of that banking crypto nexus beyond the topic of de-risking and maintaining bank accounts, what does a risk-based approach to crypto actually look like? So I fall back here on some of the same tools that banks use all the time, right? So risk assessments and assessing your risk exposure, identifying which cases, for example, you have a direct risk, for example, as your bank actively banking crypto exchanges, but also, and this is where a majority of the banks and financial institutions fall, indirect risks. So for example, having customers who also have crypto accounts and are moving funds in and out of your financial institution and your bank. What risks does that pose to you? Do you know where those funds are coming from, where they originated? It is important to basically continue your line of sight from your traditional transaction monitoring within your institution and extend it onto the blockchain and into crypto so that your line of sight doesn't get cut. Continuing to evaluate financial crime risks that are very specific, and then coming up with kind of compliance solutions, for example, blockchain monitoring solutions or data analytics. And a lot of companies are really moving in the direction of, what can my data do for me? What can digestible data do for me? And this is where, if this was an in-person roundtable, I'd love to have a discussion with every industry to say, here's what I would say to academics and crypto industry bodies, law firms, and so on. In this case, I'm pretty much tucking a little message in a bottle for each of the industries listed here. And I thought I would just share with you very few quick points per industry, because I know that we do have a very wide, incredible audience on the line. So for academic institutions, you're in a great position to convene academic forums such as this one, workshops, discuss and reflect on the state of the industry, think about conceptual frameworks and topics that really promote open banking, financial integrity and inclusion, and really work hard to dispel a lot of the initial reputational marring of the industry, which is now really kind of, outgrowing that. Generate calls for research, hold symposiums. Your legal scholars and your business schools are well positioned to offer legal write-ups and op-eds, and a lot of thought leadership and thinking through governance dilemmas, blockchain and trust issues, and kind of that new technology's crux. When it comes to crypto industry bodies, I really encourage membership to just publicly recognized trade bodies or to really push forward the messages around the value of blockchain monitoring as a foundation of compliance. List the coins that you are able to also effectively offer bespoke blockchain monitoring solutions for, so that you have a very clear ability to demonstrate an audit trail, to evidence your compliance program, and to really commit it to writing so that you don't get surprised if and should you get visited by a supervisor auditor. For international regional organizations, there's a plethora of kind of working groups and subcommittees beyond the Financial Action Task Force, but really at the regional level, and also at the industry and sector-specific international groups. I really encourage, or I would message them to undertake work to understand typologies from the entire membership around crypto. We heard a trade-based earlier. There's a bunch of others that really need to be addressed and localized. Ensure that the countries are taking crypto risks into account during the course of national risk assessment. And then for law firms to just provide legal briefs and opinion pieces. For national regulators, crypto is here and it's traceable. We can't afford to ignore it any longer, and we must be able to provide explicit guidance to banks about what it is that they need to be doing to manage their money laundering risks responsibly when it comes to crypto. So, I can again go on and on this topic, but I think at this point, Leon, I'll just close it up and turn it back to you.
Okay, thank you, Liat. That was pretty comprehensive. And because of that, we've got a wide range of questions that have come in, both Sandra and for Liat. Again, if you're just joining us, please send questions via the WebEx chat box to the host, Jason. No voice question, please. Just a reminder, my name is Dr. Leon Perlman, moderating the session. You joined us late. So, question for Sandra. Your position gives you quite a unique perspective on the evolution and rollout and the practical use of blockchain and distributed ledger technologies, both at the digital asset level and at the application level. So which organizations have you seen are helping to build standards and create use cases around KYC ML for digital assets? Sandra, you with us?
Can you hear me now?
Yeah, you're on mute. Okay.
Apologies. Thank you for that. So there's actually a lot of great work being done, but I do want to actually make sure that we are bifurcating a couple things here. One is there is the evolution of helping regulators and supervisors be better at what they do and be more efficient at it. So that's applying blockchain technology to their processes and their surveillance, right? And then there's the other piece, which is how do you go about dealing with cryptocurrencies and digital assets in a world where data is becoming value, right? Or data is value. So when you look at that, there's actually different sets of challenges, and there's different groups that are attacking different things. So when I look at the first that I mentioned, the Bank of International Settlements, BIS, has some amazing reports, as well as the Financial Stability Institute, FSI, on some of the very promising emerging tech that's being used to help with, or what they're calling subtech and regtech. And I think BIS has trialed a lot of pilots, some of them with blockchain, without blockchain. But the point being is they're looking at how do they help, especially emerging markets. And for those of you who are out there in countries where maybe the regulatory environment is still very paper-based or very manual and onerous, I think there have been a couple key examples that have been really interesting. One was a project that was worked with, I think it was sponsored by BIS or some of the related bank partners alongside Mexico. There's a case study in the Philippines, and these may or may not have a blockchain component, but the point being is they're using technology to advance better ways to surveil, because some of the findings that they've had, by the way, is that when people are freed up from doing the manual labor of translating stuff from Excel spreadsheets and dealing with the piles of documents, they can do their job better, which is to focus on the supervision of specific areas that need attention. And that's the piece that's the most important. So where blockchain starts to come in is around, as I mentioned before, the controls, the workflow, securing of the verification of that workflow, verifying that it is true, and then the data sharing piece. If you have to do if you have multiple stakeholders that need to be able to either input that data to the regulator and or the regulator needs to actually communicate out. And there's very specific reasons for why that's valuable. So that's one bucket. The other bucket, obviously, are the cryptocurrency side. And there's lots of groups. I'm going to mention a few nonprofits and also regulatory agencies like the Global Digital Finance Group, GDF, out of London. They've got codes of conduct. If you have not gone to their website, they have an amazing body of work, which includes also Part 8, which is a AML code of conduct, which a lot of crypto firms have signed up to. The CLS group has worked with, I believe it was IBM, on a very specific use case around, so that's private sector, working on a very specific use case around AML improvements around digital assets, as well as New York State DFS has come out recently very focused on innovation around crypto and obviously the BIT license. So I would watch out for groups like that, as well as there's a blockchain alliance out of DC and a few others, which I'm sure I've missed, but there are a growing body of institutions out there that are knitting together and starting to connect the dots. And we should encourage that.
Thanks, Sandra. Just a follow-up from Christine in the US to that. Just wants to know if you can enumerate any RegTech solutions or SupTech solutions which have been effective, for example, in electronic KYC or KYC utilities or anything else.
So from a implementation of blockchain technology into RegTech and SupTech, I will say we're still at very early stages. And to be frank with you guys, I'm really surprised there are not more companies focusing on that aspect, which is to help build tools for supervisors and regulators. But I did get some insight recently from a tech company that was helping BIS on some of the pilots. And one of the challenges apparently is really around finding the right business models. So the reality is, if you ask me right now, are there a lot of in production, rolled out blockchain solutions? No, I really don't know of any. And part of the challenge is around budget. Part of the challenge is around scaling. There are a lot of pilots, but things need to go into production, and there are projects that are stuck. And that's a separate set of problems.
I do know of a few, which again are pilot. The Mexican banking regulator, for example, has got a system going on. There are a number of pilots going on. There are a lot of products in what we call regulatory sandboxes being piloted. Both as you mentioned, Sandra, for internal use, that's RegTech generally, and then for supervisory purposes, SupTech. So internal trials, lots of them going on. Maybe Mexico and one or two others in sandboxes are going to come out of sandboxes to the play box, as they say. But I think it's early days, and I think to your point also, this is also an issue of capacity within those regulators. They need to know what they need to know. Sometimes they, excuse me, they don't know what they don't know. And there's a lot of capacity building both at the technology and implementation level, simply because you've got a big level of data and analytics that skill sets that need to be built, especially for reg.
Absolutely. Absolutely. And I agree with you. There needs to be a focus on this. And I agree, there's lots of pilots out there. But when I think about what is being put into production, I think there's still a gap, which means there's opportunities for those who want to focus on solving problems for regulators. I think more startups should get involved in trying to help regulators solve these problems.
Yeah, absolutely. Questions for you, Liat, from Hafan Makiwa in Kenya, one of your old stomping grounds. Asks, what actions can gaming regulators in Africa take to fight the use of cryptocurrency for money laundering in the gaming industry?
Thanks for that, Jambo Kenya. So a few things. One is look at other jurisdictions, either neighboring to Kenya or, of course, internationally. You don't need to reinvent the wheel in terms of local regulators and national authorities. A lot of this thinking has been done, and there's a great best practices for anti-money laundering compliance for gaming piece that was put out by the American Gaming Association. Now, of course, the context is different, but it's a terrific piece that kind of gives you a lot of the AML nuances that need to be put into place. But very specifically, maybe a quick point would be that there needs to be, like in a prenuptial agreement of marriage, for example, the devil's in the details, make a distinction between gaming credits and crypto. Right now, a lot of that is lumped together. There's no nuance with regards to anti-money laundering, and it's lumped together as an issue. So beginning to look at the details, differentiating how you approach in-gaming credits versus crypto purchases, what are the controls that need to be put in place with those two separately is a really good place to start. And then I would also say, investing in risk assessments and assuring that if it's a jurisdiction that's particularly heavy on a culture of gaming, that just the same, we invest in a culture of compliance, right? So to assure that a particular jurisdiction invests in assessing the risk, understanding the risks, and then putting in place mitigation. It's not to say let's outlaw gaming. It's more to say how do we manage the risk and put in the controls in place. And there's a lot of terrific resources, and I'm happy to take the conversation also offline, given time here, to chat further on that.
Thank you, Liat. I'd open it up for discussion a bit more, but we've got so many questions coming up, and we are, as you probably noticed, running a little bit late. Usually our events are on time, but due to the unprecedented number of participants and questions, we're going to extend the session for another few minutes. Sandra, a question, not surprising, on Libra. What's the impact on Libra on the AML landscape?
If only we had a magic ball, crystal ball. Look, I think there's a couple numbers-based things that we can look at, which could be, really game-changing here, which is why I think there was so much attention on this. 2.3 billion, let's just say, give or take, is their social network. Even if they fail, and I'm talking about a failure rate of like 1%, adoption, you're talking about 23 million people if they launch, right? They haven't launched yet. I'm on their distribution, but I see that every week there's a report of how many people log on, how many projects get launched, and it's ongoing, and it's evolving all around the world. So this is going to be an interesting mashup because you've got a social network, effectively, that is going to potentially rival in terms of transactions and buying power, as it were, over time, that of central banks. And so how does that work? And how is there a place in the world for a social network, whatever you want to call it, cryptocurrency, a stablecoin, to exist? And how are they regulated? And what is it? What animal is it? And I think these are the things that are still being determined, because it does take existing rules and existing regulations, but it also throws up a whole nother set of questions that are gray. And I think Libra's had to pivot in many ways, because obviously the pushback has been, some of it with, frankly, justified. Not enough clarity around how the risk management would work, not enough clarity around exactly what the reserve would look like, how would, have they run models on what the impact would look like on, depending on how big or scaled they become. And I think these are critical questions around financial stability, and these are questions that should be answered. So, with sufficient amount of view of this becoming, if they launch, that they will become significant, and the impact of that on financial markets, I think do need to be considered. I don't think it should be underestimated, because like I said, any startup that had 23 million people on day one, I'll take that any day. How about you?
Agreed. Adjacent to that question, Liat, what are some of the legal issues and challenges that we can expect relating to the crypto economy ecosystem from a regulatory policy perspective?
Yeah, thanks for that. I think that we're going to keep seeing, obviously, in the tech space, innovation. We're already having a lot of discussions around, for example, technologies such as privacy coins, which are more difficult to monitor and to track through. What does enhanced due diligence look like in that kind of space? This is, again, where I go back to, perhaps at this point, my cliche analogy of a prenuptial agreement, but I think it's going to force us all to get down to the details. Regulators, particularly at the national levels, and I'm not expecting this of the international FATF guidance and so on, but at the national level, and the U.S. does a good job of this, but there needs to be specific guidance around what does enhanced due diligence for example, privacy coins look like? What is the expectation? And I would even flip the conversation and say, we've been so focused on penalties, enforcement actions, kind of punitive results. I'd love for us to see something more like, awarding a great compliance program. What does good look like? Who and how could this be done better? And I think regulators are in a good position to pinpoint good. They see a wide variety from a legal perspective, taking the legal framework and applying it in a meaningful way. What does good look like? And then maybe award them a lot of money. And let's see where that goes. Social experiment. This is the era of social experimentation.
Okay, thank you. I think just in the interest of time, we're going to have to end it here, but just a shout out from Denise Garcia Ocampo, who Sandra referenced in the author of the paper. She's from the BIS, Bank for International Settlements, Financial Stability Institute. So thanks, Sandra, for mentioning that. Okay, so ladies and gentlemen,
they do great work.
There you go. Everybody, we're going to end now, and I want to thank Sandra and Liat in this session for the great insights, and also, again, Shawn and Nirvana for the previous session, and to you all for staying with us and participating. And it just remains for me to remind you to please be safe and stay healthy, and we'll see you next time. Thanks again from New York City. Good night, good evening, good afternoon.